Amit Gupta, Head of Equities with Motilal Oswal Private Wealth joins us. Amit, good morning. Nice to have you on ET Now. What's your market view and where do you think we stand right now?
So I think, see, if you look at this way, we had made a previous base around 18,000, if you remember when the Ukraine war started. And on the another bad news, when the US banks were collapsing in February, March 2023, we made the final bottom around 18,000 and market started moving up. So that means we spent almost 2.5 years over there. I think this particular consolidation started when in the central government, we did not see that kind of votes coming to the central government. And the capex story actually derailed in the last year from June onwards, though market made the top around 26,000 later. And now we have spent almost 1 year after that. And I think after the Indo-Pak war, the central government positioning looks pretty better and they have upfronted the capex. So if you see, I understand the March capex because you did not do that kind of capex in the beginning because of state elections. But the starting of this financial year, last year we had 99,000 crore of capex. This year financial year, we started with 1,59,000 crores. So that shows the intensity. It is getting front loaded. And that's why I think those kind of sectors can start performing. Overall market valuations are around 20 times now, considering financial year 27, because we closed at 1038. If you consider 12% growth in earnings and then 10% growth in financial year 27, I think the number comes around 1278. So it is around 20 times. So I think this is a fine, balancing number. On some days when the market will be under pressure, it can go down to 19 and a half. But I think beyond that, we are not expecting much kind of valuations coming down because there are a number of consumer names which have entered in the index in the last 4 or 5 years. And that's why I think it will remain in that particular zone only. And we have to be more stock sector specific.
What is your view on valuations, considering that everybody is saying that Indian markets are richly priced?
So Indian markets, if you compare with the other markets, they are definitely relatively higher. But we also need to understand that our weight in MSCI also has increased to almost 18-19%. And the dollar is weakening. So I think one support from the foreign institutions also can come in the Indian markets. Along with this, we also understand that we were growing with 20% of earnings growth for 2-3 years, but now that growth is not coming. So I think more consolidation possible here. You can see the consolidation within 1,000-2,000 points of the index. There are certain heavyweights in the index, which are attractively valued, which have not participated. I think it may be a time for them to support the market, and the actual move will happen in the broader market. So there are categories which are beneficiary of the FTA agreements, which we are signing with UK, maybe with the EU, what kind of deal is happening with US. All this is going to be more sector specific. So markets, we feel, will be more consolidating because next year 12% growth, earnings growth is expected. So within that range, you should expect the more move in the Nifty 50 stocks.
Okay, that's the take coming in right now on what's looking like a good bet right now in the markets. But, Amit, wanted to understand whether you've gone through what the trend updates have been and how is it that you're reading into the weak commentary by the management. There are, of course, downgrades as well coming in. But do you sense that there will be some more EPS pressure?
So I cannot comment stock specific, but what I am seeing that if the companies are growing at 35%, let us suppose for a particular period, the kind of things they do in the lifestyle business, what this company has done. So the time comes when you don't go with the same kind of growth. So if that growth comes down to 30% or 25%, it is still a better growth, but your valuations actually moved much higher. So when you were growing at 35%, that means you were expecting within 2 years you will be doubled. And when you are growing at 25%, you are expecting you will be doubled in 3 years, right? So this 1 year extension, obviously, will lead to the derating also, and the price to earning starts coming down. It consolidates, it align itself with the market also. So if you look at Nifty, which may also consolidate for 1 or 2 quarters, and eventually it will also look more attractive, right? In that case, when relatively we will see trend or these kind of stocks over the period, they will also be relatively attractive. So I think it's a time when some time has to be spent here, and then market will understand that 25% kind of growth is okay. But market has understood in Bajaj Finance, those kind of companies also, which were consolidating for long and growing much faster before, and that did not happen.
Right. Amit, the other thing I wanted to analyze was Marico's commentary. They're saying that the India business volume growth has now reached multi-quarter highs. And they're saying that core franchises, new businesses, rural growth is what is aiding the growth for them. Do you think one could see a similar kind of commentary from the other rural-focused or facing FMCG players as well?
So I think this is very interesting because we had 2 years of negative rural growth, and now we are bouncing back from there. Obviously, there is always a mean reversion from such kind of things. Now we are seeing 0.8% of growth actually in the rural story. So some names definitely will come on the surface because they have not participated for a long period. But our sense is if you are looking for a much higher growth, then I think you have to look beyond also, because there are certain disruptions also which have happened in the consumer side with these aggregators which have come now, quick commerce which has come now, and that is a challenge in giving that kind of volume growth which we are clearly seeing in the FMCG not coming. FMCG profit margins may be 19%, but the volume growth is very low. So it can pick up. There may be a technical bounce definitely which can come, but ultimately we also need to understand the sales growth is going somewhere else. The platforms, internet, the use of internet, smartphones, it is leading to that kind of change that companies need to understand. So you have more players over there, more products over there, maybe better pricing over there. So the consumers have more options. And I think this is where you cannot stop this kind of disruption now. Companies have to align themselves, have to join themselves with these kind of players, then the growth alignment can come.
All right. Hi, Amit. Morning. This is Shrishti also joining in. But Amit, amidst this whole tariff war that we have seen with respect to US and China, one of the other spaces that all the global economies were actually caught red-handed was the so much dependence on China with respect to the rare earth magnet issue. Amit, give us your sense that how do you see this particular shortage impacting the industries? And back home, Amit, in India, there are so many companies actually wanting to explore this field. As an investor, do you believe that there's any way that investors can play this theme?
Yeah, so I think with this geopolitical crisis which is happening now in the last 2, 3 years, it is leading to the emergence of many sectors in Indian markets. It's not that it is always negative. If you see when the Ukraine war started, we never thought of the chips which can be used in many sectors, in many applications. So finally, we started working on the PLI on semiconductors. You saw the move in those kind of stocks, even though the plants are not commissioned. I think rare earth is coming as that kind of opportunity because it is such an important magnet. Rare earths are basically 17 silverly white metals through which they are mined, they are refined. Most of the things are done in China. But if you look at the total mining field right now, it is, I think, whatever reserves are there, so they are almost 250 times higher than what is being mined. So there are reserves available. We did not go into that maybe because of pollution issues also. But I think that's an opportunity now in India because India has 8% of global reserves in rare earth. And we were more aligned with the light part of rare earth, which may have a lesser magnetic field. But the time has come now when we have to look at the rare earths with a strong magnetic field. So heavy rare earths. And that is where some companies are coming now. We have already seen announcement from one PSU company. They are coming forward. They have aligned 2,000 crores plus kind of sum for this thing. I think the move has started. And these applications, when we realize it is going into EVs, it is going into electronics, it is going into defense. We are pushing defense and electronics more for exports. Missiles, radars, it is used, right? So it is used in many applications like this. And that is where I think the companies will emerge in this space also. It's a good opportunity. The copper prices, if you link with this, there are companies who are in copper mining also. The copper prices are making again new highs. So if you combine this opportunity of critical minerals with copper, you will find opportunities in the market, which are available at a better valuation also. So this is how this market is interesting. It can consolidate, it can decline, and you will find that those sectors are emerging. I think that is how this financial year 26 has to be played on.
Linking that to your answer, do you believe that one can actually bet on copper as well as a commodity? And what's your overall sense on the metal pack, if you can help us with that?
So that was in deficit, the power demand, we were expecting, market was expecting around previously 9% of increase. It did not happen. It is around 6% right now because the monsoon also came before. We did not have that kind of stiff summer also. So that is fine. But eventually, when we are going more for artificial intelligence, data centers, you can see that multiple times increase in the power demand is going to come. So that is where copper also comes there. Copper demand actually increases. It is used in wires and cables. And that is where we also need to understand it can impact some of the segments like consumer durables, air conditioners, which where the copper is used. So we have to see, obviously, the producers will be beneficiary, the users can come under pressure, but there also we have to see, because if you look at air conditioning, for example, in India, where compressors, copper compressors are used, there are players in the OEMs, there are players who are providing, who are acting as a vendor and manufacturing ACs for all the players. Our sense is OEMs can remain under pressure because there is a continuous Japanese pressure over there. Market share somehow is not, they are not able to go to 1/4 of the market share also. So the producers of air conditioner, because government has clearly said that 1.4 crore ACs are sold in India every year. In the coming 4 years, we have to start exporting 1.4 crore ACs. So this is where I think in the consumer discretionary side, this is another push after mobile phones, which is going to happen in Indian market. So opportunities are there. So either ways you can look at.
Yeah, it's so good chatting with you. Thank you so much for your time today.
Thank you.
Let's also welcome on board